Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today I have on the line Ken Goldberg. I'm welcoming Ken back onto the show, and he is the founder of DSE Trading. Ken, welcome back.
Hey, thanks. Been a great 6 months since the last time, and thanks for all your awesome help, man.
Oh man, Ken. So this is the official last interview of 2022. So I'm glad that it was
Salute.
you and glad to get into today's topic and content. So we're going to talk about, of course, the recently released book and also, of course, about the podcast. So I'm excited to talk about the evolution of that and what you're doing there. But I guess just to get us kicked off, let's start this episode, Ken, the way that we start them all with our Mission Matters Minute. So Ken, we at Mission Matters, we amplify stories for entrepreneurs, executives, and experts. That's our mission. Ken, what mission matters to you?
Yeah, well, the biggest mission lately, of course, missions I think morph as we get older, and I'm into the mission now of really helping people understand what's going on with their money and the concepts surrounding money and some of the fallacies and misunderstandings about how markets work, who's in charge, who's got our back, and really who doesn't. So that's what I've been doing.
It's great. Love bringing mission-based individuals on the line to share why they do what they do, how they're doing it, and really what we can all learn from that so we can grow together. I don't want to assume that maybe some of our newer listeners caught some of our previous work together. So maybe just to set the groundwork here, tell us a little bit more about your background in finance and really how you got started on this path to helping others with their money.
Yeah, thanks. I am almost done with my fourth decade of investments in Wall Street, trading floor, banking, hedge fund type of really broad background. So I understand a little about a lot of things, and I understand a lot about maybe one or two. And what I understand mostly is how people think and how we can get caught up in the crowd, in the excitement, in the kind of the noise of the news is what I call it. And if you're not careful, you can get in some big trouble with your money and the leverage that we're often encouraged to use. And really, my job and my mission is to just be the little voice on people's shoulders that asks them, do you really know what you're doing? And here's the ramifications of what could happen if things don't go as planned. So let's get a plan to take care of not only the best case scenario, but maybe give some thought to the worst case scenario. Maybe we can construct a plan that will survive any scenario.
Yeah. And I want to go further into this and also into DSE trading and some of your methodology. But first, we got to get into this book, man. I'm so excited. I mean, a year in the making, essentially, and getting it together, put together the content, everything else. You're out. It's out. You're a published author. How do you feel?
I feel great. It's like a toe in the water. I think there's more to say, but one step at a time. But it feels good that it's a legacy that I can leave for my family and my kids, and really show a roadmap of starting from pretty humble beginnings and how determination and focus and not quitting when you fall, but getting back up, working through the hurdles of life. Got me to where I am now, which is a comfortable place.
So your contribution to the book, so I'll read it verbatim. Leveling the playing field, hurting behavior and its impact on critical decisions. So as you mentioned before, 40-year career in Wall Street, in finance, in banking. Why this topic? Why did you feel it was important to present?
Well, again, we get caught up in these extremes of emotion. And if you will picture perhaps a pendulum, where at one end of the pendulum is mania and excitement and just enthusiasm. And the other end is, depression and struggle and sadness. And what we forget is that the pendulum moves back and forth. It doesn't just hang out at excitement and enthusiasm. And if we're not aware of where we are in the pendulum swing, if we're not kind of keeping track of just how good things are, then we're really not prepared for the drawback, the correction, as some people might call it, the swing back to reality, as other people might call it. And the last couple of years have been such great examples of manic rises in stocks and IPOs and housing and crypto and everything. And we're a year into this thing called bear market, and there's just devastation. There's 60, 70, 80% declines in stocks and Bitcoin, and housing is rolling over all over the world. And a year ago, I remember locking in refi on my house, and I got a 2.25% 15-year mortgage.
Wow.
And interest rates have gone straight up. That's like a 6% mortgage now. And it's a great lesson, although it happened very quickly, but I think that's a good thing, about how fast things can change. And so our herding behavior and how we get caught up in it really can set us back a long way in our financial life and our lifestyle, in our comfort zones. And I think it's so important that people really take the time to study not only the good, but also the less good. And so I know most people aren't going to do that because it's work.
Yeah.
So I've spent, my career really studying the past 300 years of market data, going back before the New York Stock Exchange, using British stock prices and these patterns of human behavior when we act in a herd, in a crowd, when we act together like we do in the markets. The patterns repeat. And if you can see a repeating pattern about to end, whether it's a rising pattern or a declining pattern, if you can see a pattern is about to end, and then you can go back and see what happened after that end, you can get prepared for what's about to come. And so really, that's been my mission.
So I think that's also a great transition to going further into DSE trading as well. So tell us a little bit more about the company.
So DSE Trading is a part of a holding company that I have called 613 Holdings. DSE is the portion of my business that deals with stock market and various markets analysis and forecasting. And DSE is actually this group of indicators put together in some algorithms that go ahead and search history for repeating patterns. And then we're able to probability rank what should come next. So we can say, well, there's 3 different options. They should, this is really the strongest one. This is the middle one. And this one could happen. Kind of like, good, medium, and bad, the scenarios.
Yeah.
And so what I do now is I consult to investors, I consult to funds, I consult to attorneys and business people who are planning, a 3 to 5 year business plan, so that they don't get caught stuck in a trend that's about to end.
So whether it's and I don't want to say that everybody falls into this category. So obviously, if somebody's watching this and you're looking for individual financial advice, you'd want to talk to Ken offline or to your financial advisor or someone else. But generally speaking, Ken, why do people have so much trouble, making and keeping money in the market? Whether it's real estate, I mean now crypto, like regardless of the asset class, why do people have so much trouble doing this?
So humans have this need to understand. And we also are a little on the lazy side, most of us.
Yeah.
And so rather than take the time to go deep and really understand, we look around to see what other people are doing. And we figure that, well, if we just do what they do, then we'll be okay. And in fact, that leads us to getting average results. And in years of growth in bull markets and rising prices, we kind of get average growth. And in years of recession and contraction, then we can get average loss. And unfortunately, because we tend to be greedy as a group, as things are working for us, for instance, as markets move up, we tend to get away from the high quality things, stocks and companies, and we tend to move towards lower quality companies. And that's when things really get bad, because when the trend turns, of course, the weakest companies get hit the hardest, their earnings go away the quickest, and we lose the most money doing that. What the data really shows is that humans use this thing called straight line thinking. In other words, we take the most recent past and we project it to infinity. So for instance, up until a year ago, end of 2021, we've been in this fantastic bull market in housing and crypto and stocks, etc., for years. And so we get caught in this tornado of emotion and thinking that that's going to just last forever. And so we end up borrowing money from our house and going into the market. We take margin loans and going into the market. And now we're not only projecting into the future, but we're borrowing money that we don't have. We're borrowing other people's money to do that. And that straight line thinking, this linear thinking, gets us into big trouble.
So you mentioned, some of the research you've done. 300 years you're going back. You're also 40 years, experience. How do you know, or how do your models predict or know when we're heading towards turning points? Like, how do you have confidence in this?
Yeah, that's a great question. Sometimes it's really hard to pay attention to the model. The model doesn't have emotion, and it doesn't have this amazing human process that we go through called coping mechanisms, where we rationalize and justify and deny and all these things that we apply to most parts of our life. So the model just says, hey, things are overvalued, and this is a time where we need to be careful. It's hard at that time to say, oh, wow, my $1 million has become 3 million in the past 10 years. I don't want to get out of the market. And that's what we exactly should be doing, right? When things are so good to be true, utopian, and we start patting ourselves on the back for being these geniuses, we often confuse our brains with a bull market. We think we did it. And in fact, most of that is being in the right place at the right time. So the models track that emotion. They track how much we're borrowing, how much protection we're using in our portfolios and our money management decisions. They track things like that. And when they reach extremes, it's clear. The bell rings, warning signs go off. And even from, our first interview in July, there were some things we talked about that are happening now, and most people wouldn't believe them. So,
yeah. So one of the things that you use in this and in predicting and forecasting is probability ranking. Can you explain a little bit more about how that works, so the listeners can understand a little bit more about the thought process behind what goes into the advice you give?
Yeah. So if we look at history going back 300 years and we see a certain behavior, we call it behavior. Most people would think of it as stock price movement. In fact, because there's this billion or so people around the world all invested in markets, speculating in markets at the same time, the prices of things are manifestations of our emotion, our mood. When we're in a good mood, we buy stocks, we buy houses, and we buy more houses, and we Airbnb houses because we think we can always get someone to rent them from us, right? We almost get this delusion of grandeur. And the history tells us that that pattern has led to certain types of, we'll call them corrections in pricing, drawdowns. And those patterns don't always manifest in immediate crashes. They don't always crash like they did in 2008 or 2001 or 1987. Sometimes they fall halfway down, bounce a little bit back up, fall some more. And the probability ranking system can forecast very clearly how deep a correction might go. Mm-hmm. It doesn't necessarily perfectly represent the path that we're going to get there. So what we get is these big warnings of, for instance, Netflix. Netflix is down 70% in a year since its all-time high. Yeah. We got these warnings as Netflix was just going crazy that it had huge risk, with more than 50% of potential decline. We didn't know it would go straight down, but it did go straight down, and it's now reached the target where the risk goes away. Now the risk is very small. The risk at the top was very high. So this probability ranking allows us to step out of situations, markets, housing, collector cars, whatever, at points of maximum risk. And it also signals at points where risk is minimized, not zero, but much, much less. Look, after something drops 70%, what's the risk? Well, 30 more percent. But a year ago, most stocks had much higher risk than 30 because many of them were down much more than 30. So we use the probability ranking in order to decide how much money we need to protect, and when the protection is no longer needed and it makes sense to put capital back into the market.
And speaking of the current market, I do want to circle back to that, but I want to jump around a bit here. I want to spend a little bit of time on the podcast, on your podcast, before we get into what people should be thinking about as we head into 2023 from your perspective. So let's just take a moment or two here and leveling the field podcast. First off, I'm so excited about the show. I'm excited that you're continuing to record. I think are we Leveling the Playing Field podcast? Are we over 20 something episodes now? Am I off on that?
Yeah, I think I just dropped 26.
Come on, about to hit 30 episodes. Yeah. That's amazing. I know when we first started talking about the show and the idea, the concept, I mean, I know you're a content creator from way back. I mean, we're a huge contributor to The Street and just a lot of other things. How do you feel now that you're a podcaster and you're getting out there, you're building your catalog? How's that working for you?
The first couple were a little rough.
Said every podcaster probably known to existence.
Yeah, probably. But now it's just, it's a scheduled part of my life. I do it at the same time, the same day of the week. It comes out at the same time. And it's just, I get excited. As soon as I drop one, I'm making notes about the next one. There's so much out there that's misleading people. There's so much distraction, misinformation. There's complete lies in many different aspects of our culture. And so I try to bring that together in this podcast to use my 4 decades, to use my experience to question people. I'll get calls from people flying around in their private planes and they're wanting to do these crazy things with money. And I'm thinking, does that really make sense to you? Let's talk about that. And, oftentimes, luckily, I think those people are glad they called me because it's just amazing what you can hear on a golf course and think is a great idea.
Yeah. Any favorite episodes or moments in recording so far, and for shows that you've released or otherwise?
I was really happy to do some shows on risk and really what risk means. Most people have no idea about risk. Most people couldn't even conceive of stocks like, Meta and Amazon and Netflix and PayPal and Nvidia just getting destroyed like they've been. But the signs were clear and we did make those warnings. And to those who tuned in, and even in Bitcoin, I mean, in the summer, I made it really clear. I did a Bitcoin episode And I
Hmm.
said, at the end of this year, at the end of 2022, this very, very large cycle for Bitcoin is
Hmm.
going to bottom. And,
Hmm.
Bitcoin has fallen straight down from, at that time, 30,000, 35,000 to here it is 14, 15,000. And we're at the end of the window. So, I mean, opportunities are coming. And I did the same thing with stocks. We talked about real estate and interest rates
Yeah.
this summer. And so I get great feedback from people about, thank God they listened, and they tell me who sent them the podcast. They owe it to their brother or their cousin or whoever, and so that really makes me want to search out more fallacies and more misunderstandings and bring them to people's attention. I really, at this point, I really want to make that my thing.
Yeah, I think it's well. First off, I think it's great content. I'm thrilled to have it on the Mission Matters podcast network and to bring it to our audience. And we'll be putting the link to that, of course, in the show notes because I want everybody to go check that out. Circling back to the market and heading into 2023, a lot of uncertainty, a lot of things going on. What should people be considering or thinking about?
Pain.
Hmm.
2023 is lined up to make 2022 look pretty mild.
Hmm.
The economy is just rolling over into recession,
Hmm.
yet interest rates are still rising. Many people are confused on how that works. But again, we don't have to have understanding, our human need to understand, to linearly project the past into the future. We kind of need to see the writing on the wall, and there's just rarely been a 1-year recession. They typically last 2.3 years. So that
Hmm.
means we're, you know, probably almost 2 years from the end of a recession. The good news is stock markets typically bottom before the end of a recession. So maybe 15 to 18 months from now, we should see a very good stock market bottom, maybe the end of 2023, the early part of 2024. So that's something to look forward to. But what people don't understand is how much risk there is now and how much damage is yet to happen. The
Hmm.
latter years of a recession, the second half of a recession is where it really hits the fan, if you know that saying.
Hmm.
So caution, don't jump in too soon. I think most of us have learned in the past year that buying the dip just because the stock's down 20% means nothing if it goes down 50%, 60, 70, and 80, because you get buried. If you do that on margin, you owe people money that's underwater. So patience, I think, is a great buzzword for 2023. Planning,
Hmm.
maybe some honesty, maybe some time in front of the mirror, looking at yourself and asking yourself, have I been the best steward of my money? Could I have done better? And do I need help? Um,
Hmm.
it's really hard for most of us to ask for help, but there are some really good people out there. And if you've experienced, as a matter of fact, Morgan Stanley last month put out a note saying that the average U.S. portfolio, the average investor in the United States is down 43% in
Hmm.
their portfolio. That's a horrible number.
Yeah.
A 40% decline needs an 80% gain to break even,
Hmm.
or almost 80%. So we almost have to ask ourselves, are our financial advisors the best thing for my money? And do I need another one? Or do I need someone to advise me on my advisors?
Hmm.
So it's going to be a good year to take inventory. It's going to be a tough year. Don't get me wrong.
Hmm.
I'm mostly in cash,
Yeah.
and I've got a plan on what to do with that cash. I'm waiting to get in. I've been waiting for a year since we
Mhm.
got our big signals, and I can't wait to get in. But I think it's going to be at lower prices.
Hmm. And so, working with DSE trading, how do people engage in with your service, and really, and how do you work with individuals? Is it coaching one-on-one? Is it group format? Like, give us a flavor for how people actually get advice.
Yeah. So at the very simplest level,
Hmm.
we put out two 45-minute videos a week, which are general market information, with some targets on price on various asset classes, stocks, bonds, interest rates, housing, crypto, what have you. Not really crypto, but Bitcoin, oil, gold, whatever, commodities. And that's a good general way to be involved, get an idea of what we're doing. For those that are more active, that really want more individual coaching, then you want to get on the phone with us and set up some sessions where we could get into detail on what you have, what the problem is, what to get rid of, cut off the finger to save the arm, cut off the arm to save the life, type of thing. And we're very excited, actually, about to launch a new service, which is much more global. It's going to be called DSC Advisors. So instead of more stock by stock advice, it's really more of a portfolio perspective. So the bigger picture, and we're very excited about that.
Oh, that is exciting. I can't wait to hear more about that and how that unfolds. Well, Ken, I just have to say, it's been great having you on the show. Last episode of the year, going into 2023. You mentioned the DSC Advisors coming up. Have to ask, what's next overall? What's on the horizon for yourself and DSC trading?
Yeah, probably going to be doing more speaking, more traveling this year. I'm going to try and step away from the office and the computers. People coming on board to do the back end for me. That's I want to get out more, and it's a good way for me to really get the pulse of this crowd behavior, this herding mentality, and I think that will help me not only for my own portfolio, but it'll help my clients as I get them ready for the next bull market, which is coming. Right, this is a bear market. It's not done, but after it's done, amazing stuff's coming with the next move. So we want to be ready. We want to maintain capital. We want to survive the bear market, and then we want to get ready to go. It's going to be big.
It's awesome. If somebody wants to connect and follow up and learn more, what's the best way for them to do that?
You can email us at ken@dsctrading.com. You can email us at info@dscadvisors.com. And you can go to the website, dsctrading.com. And we're here. We're happy to help.
Perfect. And we'll put those websites or the website into the show notes so that our audience can go check it out. And speaking of the audience, as always, thank you for tuning in. If this is your first time with us and engaging on a Mission Matters episode or the platform overall, we're all about bringing on business owners, entrepreneurs, and executives and having them share their mission, the reason behind their mission, what they're doing in the market, and really what we can all learn and gain from that so we grow together. Whole point here of the show and what we do is we want to all grow together. If that's the type of content or information that sounds interesting or fun or exciting to you, hit that subscribe button, because we have many more mission-based individuals coming up on the line and we don't want you to miss a thing. And Ken, thanks as always for coming on the show. And I guess we should say early Happy New Year. We're a couple of days away.
Happy New Year. Thanks for having me again.